Hey everybody, I'm Mecca here, and on this week's Ask a Pro, I'm sitting down with my personal accountant, Trevor Lee from the Renaissance Group. They're located in Vancouver, British Columbia, Canada, and we're going to talk about all things tax related because, as you know, it's tax season. So let's dive into things. Hey Trevor, welcome to the channel, man. It's great to see you here.
Oh, thanks for having me again.
Awesome. All right, but hey, so I guess let's first put the disclaimer. Everyone should seek their own local accountant and verify things for their own situation because everybody's situation is so different, right? Depending on where they're living.
Right. Each country has their own separate tax laws, and you also have to consider tax treaties between, for example, Canada and the U.S. have a tax treaty. So depending on the tax treaty, it can also affect your individual tax situation. Usually they'll help an individual out, but sometimes they don't help out.
Okay.
But yeah, definitely see a qualified accountant and make sure you get good advice before putting anything on your tax return.
Love it. Let's talk about this. We were talking about a bit beforehand about finding, let's start with finding an accountant, how to find an accountant. And we're kind of joking that some people just stick with bad accountants because they don't want to bother looking for another accountant or this or that. And then I was telling you that when I sat down with you, I guess it was last August, I sat down with like 5 or 6 other accountants and I interviewed them essentially. And I was just looking at who was going to go to bat for me, who was going to help me out the most, who was I vibing with the most. What are some tips that you can give people when they're trying to find an accountant, whether it's like their first real accountant they're going to be working with, or maybe they're stuck with an accountant that they're not happy with or that's not really going to bat for them? What are some tips that you could give from your side of the table?
The first thing would be see what services they provide and see who you're going to be dealing with. Because a lot of times you'll come in and you'll meet with, say, a partner who's very knowledgeable. He's been doing accounting and tax for 20 years, knows everything. But as soon as you come in, you never hear from him. You're sort of delegated to someone else, and you're not always getting the most timely advice, and you're not always getting the most accurate advice. So I think the biggest thing is establish who you're going to be dealing with, sort of what's their expertise, what's their qualifications, get the fee sort of set up front, just so you know. Mm-hmm. The one thing I found is clients don't mind spending if say spending $1,000 to save $4,000 in taxes, but if you get a quote of say $200 and then come tax season they get a bill of $3,000, that's the one thing that clients and understandably so really aren't aware. And then basically the time has already been charged, so you can't really do too much.
Right.
So you really need to know exactly what services you're getting, who you're going to be dealing with, and things of that nature. But you do want someone who fits your personality. So if you're a more aggressive person, it's probably not going to be the best fit if you go to someone who does everything by the book or is a little more conservative, because it does depend on the country. But Canada, there's a lot of judgment. So there's some cases where it's clearly income and it's clearly a deduction. Mm-hmm. Other times it's a really bit of a gray area. So it really depends on the facts of the case. So if you're a little more on the aggressive side, it's probably not going to make sense to see an accountant who's not going to take a risk, who's not going to try to do something to save you money. They just want to do everything by the book. Because especially in Canada, people think if CRA says something, it's right. CRA is wrong a lot of the time, especially with the new agents that they're hiring. Yeah. A lot of them, from our experience, have been inexperienced. Right. With that being said, CRA is very knowledgeable, so I'm not trying to throw CRA under the bus, but you do need to understand that they just interpret the law. So just like I can make a mistake, a CRA agent can make a mistake as well. So my thought would be go with someone who fits your level of risk. I mean, some clients don't want to claim the expense, but other ones want to push the envelope, right? Because they said it related to my business, it helped me earn more income or whatever the case may be. Yeah. So that's one of the biggest things. You want someone who's on your same level. Because the clients who I have similar sort of style with, you get along a lot better too. Because otherwise, you're sort of going back and forth, and it almost it doesn't turn into the best relationship.
You're absolutely right. What are some warning signs that somebody's working with an accountant that they probably want to reconsider the relationship?
A lot of times, like if you send an email on Monday,
yeah,
and you don't get a response, or you have to send 2 or 3 emails to see what's going on,
yep.
or if you're getting either your corporate tax return or personal tax returns, and you have to keep on checking into it, or if you do a quick review and you're like, oh, did you consider this, and they're basically like, oh, that doesn't apply here when it might be an option. So it really depends on how they're treating you, because at the end of the day, and pretty much in any country, you're paying a good fee to an accountant, so they should be providing the best service possible. But yeah, that's the biggest thing, is usually if they're putting you to the back burner, because sometimes they might not think that you're the most important client to them at that given time.
That's funny. Every single one of the things that you just mentioned, I went through with previous accountants. And I made that decision because we were talking about that an accountant handles the most important thing in your business, the only reason that you get into business, your money. And you want somebody who's going to look after you, take care of it, find the way to pay as little as tax as possible, or just get the proper deductions or whatever the case is. But your accountant, like you said, it's essentially like your marriage. You need to spend time finding the right one so you can settle down and create that more long-term relationship with them.
Yeah, that's totally true. I mean, a simple tip might be if you're getting your personal tax return done, just ask your accountant, like, what are the changes? And if they don't tell you anything or say there's no changes, they're probably not up to speed. And especially in Canada right now, there's so many tax changes going on at both the personal and corporate level that, I mean, sometimes a lot of the changes won't apply, but you want to make sure that your accountant's up to speed. Because I know a lot of accountants have been doing it for 20 or 30 years, and they're like, oh, I know everything. But that's usually when you get into the most trouble, is when you think you know everything.
And I think, I don't know how this is in your firm, but I worked with one accountant, and she was kind of closer to the end of her career. Yeah. I could definitely tell with just certain things and how her office was and everything. So the fact that you're a younger guy, your office was downtown in a high rise, and that was definitely a big plus for me.
Yeah, I mean, sometimes you do get what you pay for, and I've sort of ran into the similar things where we've taken over other clients from accountants who were either retiring or leaving the country for one reason or another, and a lot of times they weren't giving their all, so to speak.
Right.
So, you always have to make sure that you're getting what you're paying for, right?
Yeah, absolutely, man. All right, let's. So I was posting in the Facebook group and about some questions for people just to ask. And we were talking earlier. I work with people from all over the world. Some of these questions, understandably, are going to be a little outside of your jurisdiction or maybe your professional knowledge. So do the best you can with the ones that are kind of like out of the Canadian realm. But okay, so let's see this first one says, I plan to move away to Peru in a few months after my royalties for Kindle increase. Stay there for the majority of the year and focus entirely on making other streams of revenue online. How do I do my taxes from abroad? Will I have to pay taxes there too? What region does your accountant handle taxes in? Canada? Let's start with those two questions. So how do you do your taxes from abroad, and will you also have to pay taxes if you're living in another country?
I guess it depends where they're moving from.
Okay.
Right. Like if this person was, say, for example, U.S. citizen.
Yeah.
U.S. taxes you basically based on your citizenship.
Okay.
So if you leave the States and you go to Peru, you're going to be taxed on your worldwide income.
Okay.
Which is completely different than Canada. Canada only taxes you if you're a deemed resident of Canada. So if I leave Canada and I pay what they call the departure tax,
right.
if I move to Peru, after that, I'm only going to be taxed in Peru. So Canada is one of the only countries that does have an actual departure tax. So they do get you when you leave, but once you leave, like if you don't, there are certain assets that aren't subject to it. So if you don't have significant assets, basically you would only be getting taxed in Peru. I'm not familiar with Peru's tax system, but essentially wherever they move from, they would most likely, trying to remember Peru, but they should have a tax treaty with that country. So essentially the tax treaty allows for relief from double taxation.
Right.
Because if we're using the U.S. example, you pay tax in U.S. and you pay tax in Peru. So they don't want you basically being double taxed. So that's technically how the foreign tax credits work. But then you'd have to look at the treaty and things of that nature. In regards to doing your tax returns, really, as long as you have a good relationship, nowadays we can basically do everything online. I mean, it is better if you can actually see the person and come in and sign the final documents. But yeah, I mean, everything can basically be done online with electronic filing, or the person, if they're working in Peru, can file it online themselves. And CRA did recently bring in a new policy where if you have little or no income, you can actually do it over the phone. So that's starting in 20. I think this is the first year, so it may not apply to him, but for some people who don't want to, if all you have is, say you're an elderly person and you only have some pension income, it doesn't make sense to go to an accountant. You can do it over the phone. But I mean, a case like that, you can always go to a cheaper option as well, such as HR Watch or something like that.
That was one of the things that we talked about, was the double taxation. Because for my situation, I'm still a deemed resident of Canada. I still have my resident ties and everything there. But then I sat down with a Mexican accountant as well as a Mexican tax lawyer in Mexico to find out, is it going to be, one, cheaper for me to give up my residency in Canada and just pay Mexican tax, incorporate the business in Mexico, or or if I just choose to keep ties with Canada, do I have to pay any Mexican taxes? And they said, no, you can just pay, you don't have to pay any tax while you're here. If you opened up a bank account, things would get more complicated. So they said, just don't do that. But because your business is solely based online and you're not technically employing any Mexicans or anything like that, you don't have to pay any tax while you're here in Mexico.
Yeah, and that makes sense. And from the Canadian perspective, I mean, you're paying CRA money, so they're not going to be like, no, we don't want your tax money. And after a discussion, I mean, we did decide that you still have strong ties to Canada. So I mean, it was a position that we took, right?
Yeah.
So it totally makes sense in that case as well.
Sweet. All right. So here's a really general question: how to pay as little tax as possible?
It really depends on your personal situation. It depends where you're living, what type of business you're doing. Sort of, if you have a citizenship in the States in another country, for example, or even Australia. I'm not familiar with Australia, but if you're from Australia and you're working in the U.S., that can make things a lot complicated. But at the end of the day, you want to basically maximize any possible deductions. And in both Canada and the U.S., there's usually not a lot, especially with Trump's recent changes in the U.S. But yeah, any deductions that you can maximize. And then other than that, in Canada, we were able to income split. That's been reduced as some of the budget changes. But I mean, that would basically be my goal. Essentially, you just have to look at your structure and look at options available. There's not a one-fits-all sort of scenario, so you really need to, if something changes, like if your business is taking off or you got a new contract, it's always worthwhile to discuss with your accountant, because he can look at possible options or maybe possible deductions that you missed.
And would step one be incorporating? Because how much can you get away with as an individual? right? Like,
I wouldn't say incorporating. Essentially, the expenses are going in Canada anyways are essentially going to be the same.
okay.
Usually, there would be a benefit to incorporating if you didn't need a whole bunch of money. So if you're able to keep a lot of money in the corporation, you were able to get a bunch of deferral mechanisms. So essentially, you pay a lot less tax in Canada if you take out, say, 20 or 30 grand over 4 or 5 years, compared to if you take 100 grand in 1 year. But with that being said, there's significant changes that are making it more difficult. So I think the best thing would sort of just monitor each year and then go from there. So just sort of see what your income's at, what your plan is, and then go from there. But I wouldn't jump to incorporating unless it was required for a liability reason. It's sort of just a wait and see, and then get your accountant to run the numbers, because it doesn't make sense to spend $3 grand in legal fees and $3 grand in ongoing compliance fees if it only saves you $500, right? You want to make sure that anything you're doing is saving you money in the long run, not losing you money.
So that's part 2. It says, at what point is it advisable to set up a company to limit financial liability on me as an individual? I know it's going to come down to like case by case, but can you do the best you can to give some like kind of general, like here are the things you want to start looking at? Or
I think the starting point would be look at your business, see what potential risks are out there. So if you're doing something and you know there's the possibility of the lawsuit, definitely you would want to be looking at incorporating. Just because if you have significant personal assets, you don't want them going after that.
Okay.
And sometimes it makes sense to have more than one company, just to sort of
diversify your,
sort of limit the risk and go from there. I mean, with that being said, the States does have a different structure. They have the structure called an LLC, which is basically a combination of a corporation and a partnership. We don't have those in Canada. So if there's any U.S. People listening, basically any accountant they'll go and see they'll always tell them set up an LLC, just because you get that liability, and then they're usually tax efficient because everything flows through to you on the individual level. And with the recent rates that have dropped in the States, they're even more beneficial than in Canada. Because in Canada, essentially, we have 2 layers of tax. If you have a corporation, you pay out one at the corporate level, and then when you take funds out of the corp, either by dividend or salary, then you're going to get taxed again.
Right.
You always have to look at that two-layer level of tax. Because I know the government always says, "Oh, we have such a low small business tax rate," but the highest marginal tax rate is almost 50% in BC, right? so you have to take that into account.
Wow, huh? Just giving away 50% of your income just to the government. But then again, I always say, if you complain about paying taxes, go live somewhere where, like here down in Mexico, everyone pays taxes here, but the government so corrupt, and like the roads are broken, like the sewage is crap, like paying taxes is not the end of the world when the government takes care of its people. But that's a whole other topic.
But any chance you can pay the least amount is for the best. But
what about, we talked about this, what about a tax haven? What about going to the Bahamas? What about going to is it Monaco? No, where's that? Where they do the F1 over in Spain somewhere? Is it Monaco? Not Morocco. No, definitely not Morocco. Yeah, Monaco. Yeah, Monaco.
I was thinking Monaco. Yeah.
Yeah. So, what about just going over to a place like that and setting up shop and paying no tax? But is that kind of more of the extreme cases? Is that it's not as easy as I'm making it sound?
It really depends on where you're from.
Okay.
And your business.
Yeah.
But I mean, you do have to look at the risk, especially if you're American. I would think very carefully about that, because they take their tax laws very serious. And even in Canada, we have a bunch of rules that basically limit the ability to do that, unless if you're doing it for basically that's the only reason why you're doing it. You can explore it, but usually these structures, if you want to do them right, are very expensive to set up. and they're very expensive to maintain. Otherwise, they'll basically show up as a sham, and then you'll get yourself into more hot water. You would need a substantial amount of money to do it, and it'd be on the right business. Most structures that I've seen are more on the tech side. Like, for example, like a company like Apple or Google. Basically, it's a complex structure, but right now Apple has something like, I forget how much, but like 300 billion in the Caymans that will never be taxed until it was repatriated back. I mean, the states didn't bring in a one-time tax, so I think they're going to get, I think it was roughly about 45 billion of that.
Yeah.
But before, under the old rules, as long as the money never came back,
there was
no tax, right? But you have to keep in mind that's a huge publicly traded company. It's not someone operating their own business.
So somebody like, okay, let's take myself. Let's say fast forward, business. We're bringing in like 500,000-700,000 a year. Me and my wife were like, wanted to move to the Grand Caymans. Okay, is that Grand Caymans said tax haven, right? Is that one of the places?
Yeah, it's one of them. I mean,
or the Cayman Islands.
There you go. Like I think Bermuda even has Bermuda's 4%, and I think it's only on payroll.
Okay, so let's take Bermuda, 4%. So we can't, and okay, so it's not as easy as just saying, all right, Canada, adios. We cut our residency ties, and we go buy a place if we have to, and then register the business over. It's not as simple. Like, there might be a few more hoops. Canada might not let me go as easy as peasy, or.
In that case, as long as you paid all your departure tax when you left Canada, really there's nothing that Canada
is going to do
about it, right? So if you don't have significant assets when you left, that might be another option.
So don't buy a house in Canada anytime soon.
It's structure compared to if you live say you live in Vancouver, and you try to set up a corporation in Bermuda and try to do it around, but everything's still taking place in Canada.
Then that's different.
Have to be tricky and very careful. And I would caution anyone who does that. I haven't dealt with a lot of them, but in your case, if you were like, okay, I'm no longer going to be a Canadian resident, I'm closing all my bank accounts, canceling my driver's license, I'm changing my mailing address.
So really got to cut ties.
I'm cutting everything to Canada, and you don't have any significant assets like
a house or
any property, anything like that. You sold your car that's in Canada. I think it would be tough for CRE to say that you're still a resident of Canada, and then you would be subject to any or minimal taxes in the Bermuda or wherever you're at. But with that being said, a lot of people don't have that option, right?
Cool.
Because if you've been operating a business, you might not think it's worth much, but CRA might be like, oh, that company is worth $10 million. So when you leave Canada, you're going to have a massive departure tax. Some people can't even afford the departure tax. So
really, so what percentage is it?
It's substantial.
What percentage can it be? Is it a percentage or is it a flat rate based on the value of the business?
It depends on your assets and what you hold. But essentially, you have a deemed departure on everything. So essentially, you're going to be taxed as a capital gain on any property that you own. So if you started a business and incorporated on day one, essentially your shares have a cost of say $1.
Yeah.
10 years down the road, it's worth $10 million. Basically, you're going to have a $9,999,900, say $10 million gain, of which 50% would be taxable, right?
And then, oh wow, so it can be substantial and makes sense. That makes sense. But would I still be I'd still be Canadian citizen, right? I'm not giving up my citizenship.
You'd still be a Canadian citizen. You just wouldn't be a Canadian resident.
So I could go back, travel, no problem, but.
Yeah, like you don't have to give up like your
passport
or thing like that, and that's different from the United States. Like even if you're a green card holder in the United States, you're considered a U.S. tax person, so you're taxed on your worldwide income. So if you ever want to give that green card up, you have to go through the whole process of surrendering it and signing a whole bunch of documents, and not to mention it usually costs, from my experience, about $4 or $5 grand in legal fees.
The government really likes to make sure they can hold on to every single penny they can, huh?
Yeah, it's especially right now with with the way we're spending over here in Canada. That's why all these tax changes are coming. Is we need to make sure we have enough money to fund everything.
Jeez. All right. Crazy. Okay, let's move on to the next question. Okay, I'm a national of country A, earning through the U.S., Amazon, U.S. banks, withdrawing and spending it all in country C. As I'm making little right now, I never thought much about taxes since I filed in those Amazon tax forms. So those are you fill out tax forms when you sign up for your Amazon account.
Okay.
So like
is that more for this the tax that they charge?
See, I'm not 100% sure. Like we fill it out, you have to send in your SIN number and all of that. I could probably send you a copy of the one I did so you can actually see it. Maybe that'll kind of give you a bit more insight.
Okay, yeah.
But he says, okay, and they're taking a chunk of my earnings. So okay, if you don't fill out your tax form correctly, or you don't have your SIN number on it or whatever, Amazon will hold 30% of your earnings as a tax withhold. In some countries, I believe you can't even get around it. Maybe they don't have like a proper tax treaty with the US or wherever, but it says, where should I refer to in order to make sure I'm okay with taxes? I'm guessing those, I don't know. Do you understand that or?
Basically, the way I understand that is I think what Amazon's doing is they're saying that 30%, that payment represents what they call fixed determinable annual payment. Essentially, it's a withholding tax.
Yeah.
So if you don't provide the tax information to you, they have to do 30. If you can show that the rate should be reduced, then it will result in a lower rate. So essentially, that happens. It's the same with basically investment income. So if you're a Canadian and you own U.S. stocks, and you get a U.S. dividend, under the Canada tax treaty, they're required to withhold 15% in most circumstances. In some cases, it can be reduced to 5%. But yeah, I think that's why they're asking it, just so they're withholding the right amount. So essentially, what happens is because they withhold that amount, you don't have to file a tax return in that country. So if I'm a Canadian citizen and Amazon withholds the payment, let's just say it's reduced to 15% for the treaty. I don't have to go and file a U.S. tax return.
Right.
Because of that. But that 15% I basically can claim on my Canadian tax return as a foreign tax credit, assuming all criteria is met. So I would have to look at the documents, but I think it's just a withholding tax. And that would be my understanding, but without seeing the document, it's a little hard to say.
Yeah, no worries. I put a note. I'll send you the documents just because then, yeah, you'll know. All right, let's move on to the next one. So another question would be about opening a company somewhere in order to have all taxes paid through that. Is that a clever option? Is that kind of what we covered about? Or maybe like, I've seen this question pop up. Like people are like, oh, should I open a company or my LLC in Delaware versus Arizona?
Yeah, I mean, it really depends where you're operating. Usually it's going to be, if you're setting up an LLC, I mean, you obviously have to go see your U.S. accountant, but usually you're going to be incorporated in either Delaware or Nevada. Because usually by doing it that way, you can avoid the state tax. So that's usually why it's done in those states. With that being said, I don't have a ton of U.S. experience. I just have a broad enough, so go see your U.S. accountant if you're looking at incorporating.
Okay. Do I need to pay sales tax for Amazon.ca? My country of residence is Canada, so one accountant said sales tax for Canada is paid for Amazon.ca. My reasoning, and many other publishers also agree, that Amazon, which is the merchant, and we are royalty recipients, there's a big distinction between the two. Amazon has the store, we just put the product into the store, Amazon sells it, and therefore they're responsible for taxes. We just receive royalties, which in essence is income. So what are your thoughts on this? Because I know the guy who wrote the question, and it's one accountant says one thing, another says another, and this and that. So
I guess it depends on what sales tax is he referring to? Is that the other accountant said that he was responsible for? Like, are we talking PST, GST?
He's based in Ontario. So
okay.
I think that's HST there. But like, so when we're paying, so you buy the book for 99 cents. Okay.
Right.
Amazon pays us 35 cents. So our income is 35 cents off the 99-cent book. Do we now pay, what happens with the tax for that? Or does that kind of make sense? Or
yeah, without knowing all the facts, I'd have to look into it. I can't really think of.
Okay.
I just don't want to give a wrong answer without knowing all the facts. Just because GST and HST can be a little complicated, so I would want to make sure I'm understanding everything before I comment on that one.
No worries. I should have thought. Oh, well, this is good because I'll send you those documents and you can kind of read through. Because I know it does mention some of this stuff in the documents, but yeah. I just sign them, right? I don't read them. I don't understand them. That's what I pay you the big bucks for.
yeah.
Right?
No worries.
So okay, so we'll get back to that. Get back to that question. Okay, what's the best way to track expenses to give to your accountant at the end of the year? Any tips, suggestions that, because I know if we just give you, I don't even know if your office handles this, but if I just say, here's all my receipts, here's all my stuff for you, how much money is that going to cost me if I give it to you all unorganized?
It really depends on what you're doing too. Like if you have a corporation, it's a lot more. It takes a lot more time to go through compared to if you're operating as a sole proprietor and you have all your revenue and all your expenses. Essentially, we don't audit that information. So if something looks like really unreasonable, we might ask you. Like if you have revenue of 100 grand and meals of 80 grand, we're probably going to be like, is this right? Are you sure you know what's going on here?
Okay.
But for the most part, as long as you have the information and are basically a easy way to go through it, that works for us. I know for some of our clients, we have a program where we can actually send it over, and all you have to do is put the amounts in and then send it back to us. So you would put in basically all your revenue, all your expenses, and the programs. It's pretty smart and works good to minimize any potential CRA audits and things of that nature.
So is that what I should possibly be doing then, or is that?
It depends. If you have something already that summarizes it all, then I would say no. If not, I could send you the document and you can go in.
So I guess when I send you my stuff, you'll see, be like, all right, you're kind of on track, or oh my God, Emeka, what a disaster. Here, let's do it this way.
Yeah, but I mean, if all the revenue and all the expenses are there, we might just have to make some adjustments to the spreadsheet and go from there. But yeah, as long as it's somewhat easy to follow, then it's usually not too bad.
Sounds good. All right, we just got a couple more here, and then I'll let you get back to your day. What's the best way to find an accountant if you've never really worked with an accountant? You've just been using like H&R Block or one of the one-stop shop places in the mall.
Usually the best is maybe talk to a friend or someone you know and try to get a referral. Because usually if someone says, "Oh, go to this accountant," they're not going. Well, hopefully they don't give you someone who's bad, right? Unless they really don't like you. But usually they're going to give you someone good. Another option might be you can always Google and sort of check out the reviews. I mean, you do have to take that with a grain of salt. I have heard stories of accountants giving themselves their own reviews to make themselves look good. I thought it was funny.
Yeah.
But yeah, usually word of mouth and just see who they use and if they're happy and sort of what type of service they get and go from there.
Sweet. All right. Last one is a bookkeeper or an accountant, or do you need both?
It really depends on your situation. If you only have, say, for example, a small business and the bookkeeper can take care of, say, filing your GST and possibly PST here in BC, file your tax return, then it might not make sense to go to the accountant, because I know our fees are quite a bit more than what a bookkeeper or H&R would charge. But if you have a complex tax situation, like if you're selling a property and you're not sure if you can claim the principal residence exemption in either Canada or the U.S., you need to be careful. Because sometimes it's better to spend a little more to to avoid the headache down the road. So yeah, it really depends on your situation and what you're dealing with. But I know, for example, if a new client comes to us, like I'll look at their last tax return for free and be like, do you have any issues? Do you have any opportunities? Anything I noticed? And then if there's not, a lot of times I'm like, yeah, it probably makes more sense to stay with your bookkeeper who charges $150 or $200 compared to what we charge for your situation.
Right. Cool. Well, hey, thank you so much, man, for taking some time to answer all these questions. And I'll do a follow-up with you once I send you the Amazon documents so you can kind of read over those. And if you have any additional thoughts, I'll just post them, I guess, in the comment section of this video. But hey, if you're taking on some new clients, I'm guessing you're only going to work with Canadian residents. How can people reach you if they're interested about possibly hiring your firm to help handle their accounting needs?
Yeah, thanks for that. You can check out our website at renaissancegroup.ca. My direct email is tlee@artgroup.ca. So feel free to email me any questions, or if you'll possibly want me to look at your tax situation and go from there.
That's awesome, man. That's awesome. Well, thank you so much for taking some time once again, man. And I know this is like go time for you guys over the next little bit.
Yeah, it's not too busy yet, but come February, it's going to be the busy time of the year.
Cool. Awesome. All right. Thanks so much.
No worries. Thanks again.
Cool.
Okay, bye.